But first, let's turn to Mike and ask what's buzzing in the world of industrial ventilation, Michael?
I'm not really sure how to respond to
Yes.
that, but yeah, Volution. It's as you've mentioned, is a company that makes fans. It's mainly it's ventilation systems for buildings. Uh, you also mentioned under the radar, which I think is fair enough. If you went out onto a high street, I don't think most people would know who it was, but it's if you've been reading my ideas fairly closely, then I put them on a buy about 2 years ago, and they're up about 65% since then. And they're also a bit of a fund manager's favourite. You've got Capital Group, JP Morgan, Bailey Gifford, all with about 5% each of it. In terms of what it does, like I said, building fans, ventilation systems, heat recovery systems, it's got quite a broad traffic spread now. About 10 years ago, it made most of its money in the UK, about 70%. That's down to about 40% now. It's in 17 countries, mainly continental Europe and Australasia.
So it's quite an interesting spread of business, isn't it? I mean, why are people sort of interested and excited about it particularly? I mean, the results were out today. Would they particularly good?
I saw one analyst describe them as solid, which is fair enough. You look at like top line growth of 20% and adjusted profits were up about 20%. Now, it makes a lot of adjustments because it is a bit of a serial acquirer. So, on a statutory level, profits were down slightly. And the bulk of that growth came through its biggest acquisition to date, which it did in September last year, which is an Australian company called Fantech. In terms of results, like I said, solid. Shares are up about 5%. So it seems the market has taken reasonably well to it.
Well, and what's actually driving the demand from the company's point of view? Is it an area that seems to attract a lot of regulation, for instance?
Yeah, definitely. And that is the main driver. The UK was even though the UK isn't as big a part as it was of the company, it was the strongest growing region last year. And Volution serves both the new build and the home repair improvement markets and commercial as well, sorry. But it's the regulatory side really and the home improvement side that drove that growth as opposed to new build, which is improving but still not not where you would think it would be given the Labour government making house building a central plank of policy. So with regulation, there are a few different bits. This month, there's a law that comes into force called Awab's Law, which is named after a 2-year-old boy, Awabi Shak, who died in social housing in Rochdale in a home that was full of mold and damp. And that law forces social housing providers to deal with issues such as damp and mold and any other kind of emergency issues that could be a threat to health within a limited time period. So that's been one driver. I spoke to the chief executive, Ronnie George, this morning. He was also talking about the home energy model, which is a new standard for assessing the energy efficiency of homes, which is being brought in ahead of the future home standard, which will be it's a new government standard to make homes much more energy efficient. And I think that is due in Parliament by the end of this year.
And why have they expanded in Australia specifically? That seems to be a bit of a destination at the moment for quite a few UK companies. Have they given a rationale for that?
Yeah, they were there already, and this deal makes them the biggest player in the commercial side of the building and ventilation market. They were already a significant player in the home side, um, but he talked about this being a deal that kind of moves the needle. There's a slight drag on margins because of it, because Fantech's margin is slightly lower than the group's, but it's only marginal, and they see plenty of opportunity for upside in terms of both being able to cut out duplicated costs and also to cross-sell.
Okay, that's a pretty straightforward case then, isn't it? And how does the valuation look? Is it where still investors are getting involved, as from your point of
Yeah, it's an interesting one. It is pricey for a building product company. It's on a P of about 20 times. next year's earnings. And if you look at the sector average, the sector average is about 10 times. But as I said, it's been a serial acquirer, but it's done it well. It's integrated well. They have a slide in their presentation deck this morning showing their compound growth since they floated 11 years ago in 2014, and revenue and both earnings have compounded at about 12% a year. So it's been a solid performer. The Fantech deal did push up debt quite a bit. I think debt went up by over 100 million. And I asked whether or not that would kind of cool their appetite for more deals. And Ronnie George said that wasn't the case, really. He said it's a pretty solid cash compounder. They talked about operating cash conversion of over 100% this year. And when you look at the leverage ratio, it's fallen from 1.6 down to 1.2. And he said they're comfortable with anything up to 2 times. So I would expect maybe more on the acquisition front this year.
Excellent. Okay, well, great. Thanks, Mike, for looking into that.